Mastering Volatility 75 Index, the proven strategy for the profitable trading. Are you ready to skyrocket your trading profits? Get ready to uncover the untapped potential of the Volatility 75 Index. In this video, we will reveal the game-changing strategy and insider tips that professional traders use to dominate this volatile market. If you are seeking financial freedom and want to take your trading skill to the next level, then this is the video you can't afford to miss. Welcome to our channel. I'm by names of AJ Kelly, CEO at Online Dives, where we dig deep into the world of Forex trading and help you unlock your true profits potential. In today's video, we are focusing on the Volatility 75 Index, a proven instrument that can offer immense opportunity for the traders like you. Whether you are a beginner looking to grasp the fundamentals or an experienced trader seeking advanced strategies, all of you guys we have got covered. Join us as we share the secrets, techniques, and expert insights that will propel you towards consistent profits in the Volatility 75 Index trading. So let's dive right in and embark on this exciting trading journey together. Alright guys, first thing first, before you start trading any kind of asset, you have to master the top-down analysis. You have to understand what we call the time frame, from the high time frame to the low time frame, guys. So as well, we are going first to cover the time frame. The purpose of the time frames is time frame. So as we are making our top-down analysis, always we have to start from a high time frame. So when you doing your market analysis as well, you're starting from the high time frame. Why we use these high time frames for our top-down analysis? We use them as a foundation of our trading skills, guys, and our trading journey, guys. You can't do anything, you can't move anywhere without knowing where you are going. So it is the same thing as the Forex. We have to find the base as well. We have analysis time frame, and then another time frame we have entry time frame, and the last time frame we have a refined time frame. So we are going to be looking at each time frame and its role. So analysis time frame. Here on analysis time frame we have monthly, we have weekly, and we have daily. So an entry time frame we have our hourly time frames, where we have H4, H1, and the H12, all etc. And then refinery time frame. On the refinery time frame, where we got minutes time frames, all of kind of minutes. We have 30 minutes, we have 15 minutes, and 1 minute. All of them they fall on a refined time frame. Analysis time frame we have monthly. We have what? We have monthly time frame. What is the role of the monthly time frame? A monthly time frame is used as for what? A direction. What? A direction, guys. It's used as a direction. And then weekly, we have weekly and daily. These are time frames for getting structure. For getting what? For getting structures. We get our structure in what? In weekly and daily. So in monthly we get a what? A direction, and then in daily stroke weekly we get what? We get structures, guys. So are you getting that point? And then entry time frame we having hours. We have hourly time frames. Hourly time frames, here we have a H4, H12, and H8 and more, guys, as you can know, but it will depends to you which kind of the time frame which you want to use, guys. So let us do like this. Here we have analysis time frame. We have monthly. sorry, a little bit. We have monthly here. So on monthly we have weekly, and here we have what? We have daily. Here we have hourly, H4. Also here we have what? H1. And then on the refinery time frame, we have H4. We have H4 here. Here we have H1. Here we have minute what? Minutes, guys. So, well, I hope you have understood the purpose of what? Of the all time frames, guys. A swinger, you have to get your direction on monthly time frame, and then you get your structures on weekly and daily. Are you getting the point? These structures, they are going to help you to get what? To take your entry. Are you getting the point? So scalper, you have to get your direction. You have to get to the direction on weekly. Are you getting the point? You have to get your direction on weekly. Sorry, a little bit. You have to get the direction on weekly. Then you get your structures. You get your structures on what? On a daily and H4. You get your structures on daily and H4. You get your entry on H1 and minutes. Are you getting fine? Are you getting the point? You get your entry on what? On H1. On H1. Get the entry in H1. Why? Because we can see that if you are swinging, we have to take entries on H4. We have to take what? Entries on H4. So in H4, if you count H4, how many candles are in the daily? There are 6 candles in overall daily, guys. But if you're looking a morning star, which means this candle, it will be like this. Let us say that a morning star, which means you will spend almost 12 hours when you are still waiting the setup to form. But if you refine your entry criteria into what? In hourlies, so that we find that you have almost 12 hours in a day, so that you can take a trade, and then what? And then you scalp that trade, or you swing, or that trade at the all of the day. So as we have seen the foundation of the time frames, the foundations of the market analysis. So let us go to do our market analysis. As well, we are doing the market analysis, we have to start from what? From monthly time frame to get the direction. We are on the monthly. Right now. So if you can see here right now, the volatility 75 index, we can see making the lower low, lower high, lower low, lower high. Come on, retest this one. Lower low, lower high, lower low, lower, which means we are around here now making the what? The equal lows and equal highs, guys. So if we can see clearly, guys, that we have broke this recent low, we have come back to do what? To make a retest at this zone, and then we continue down. That is what we can see, which means we are still in overall what? Overall trend. This is a direction, which means the monthly is showing us that we have just retested this zone. So we are looking to do what? To take off the lower low which have been formed, to do what? To create a new lower low. Are you getting the point? Now we have got our direction. This is the purpose of the monthly, to show us the direction. Now we are going down. So let us go to weekly to start getting our structures, guys. Do what? To get our structure. So we are in the weekly. So as here right now, we are here on the weekly. What we have to do to see that so the market is moving down. The market is moving down. Where do we going to take our entries, guys? So we have to get our tools, our horizontal lines, guys. we have to mark this. Remember guys, we have seen that the market is going down. That is the monthly time frame have shown us. We have also to get the same picture in this weekly, that which will show us that the market is going down. We can see that the market it have forming that high, high low, high, low. It have break this. Now it have come back to do what? To retest also. Even it is the same thing. You can see that the market from the high, low, high, low, and then it have come back to make a retest of this previous high low to form a new a new lower low. So it is lying on the same direction. Why, guys? So as well, we can see that the market it have come to make here a retest. So we get our horizontal line we put on this structure like this. Are you getting point? You can put it on the body or put it in the wicks. I love to put it at at the wicks. That is our structure. So and then we find the low of this like here. Are you getting point? Which means we are coming to take off this and we come down. So we get another low here is this one. So these are our structure, guys. So we diving in deep, we dive more deep to daily to get a clear picture, a clear direction. So let us go to daily and we see what is the daily telling us. We can see guys, we can see right now the daily where it is. We can get the daily, we see. So there are two things right now here to happen. There are two things here right now to happen. As long as we go down, we can see that the market is still making the high highs, high low, high highs, high low. We are still waiting the market can come back here before it drops. Are you getting the point? Are you getting the point? So this zone here, it is our sell zone. Before that, we have another zone here. Let us mark it very well. We have another zone here down in a daily. You see that? We have this zone here, guys, in a daily. If you can see it clearly, this, which means that the market it have formed it have coming, making the high highs. You can see forming the high low, high comes and form the equal lows, come back, also failed to close above. Now it's struggling, so that we are going down. We are also having the same picture. So what you have to do right now, let us say that this was not yet happened, that this consolidation right now, what we are seeing here, it have been not happened. So this was supposed to be you structure of taking entries, guys. This was supposed to be you structure of taking entry. You wait the market to come. You wait the market to come and tap to this entry. To tap to this zone around here, so that immediately when it taps, that you dive down into the entry time frame. So let us go to see if this was not happened, so that let us say that the market now it have come and tapped in. We see what happened. So we have to go to our entry time frame. So where is the target? This is our target in a daily. We have this here, target 1, and we have also this here, target 2. Are you getting the point, guys? Because as overall the market is going to go down, it will not go down directly like that. It will go moving, forming the high highs. It will move forming the low highs and the lower lows like this. So this is our target. This is our entry zone, and this is our target 1. This is our target 2. Are you getting the point? So let us diving in to our entry time frame. As long as you finish to get the fundamental, as long as you have finished to get you foundations of where to take the trade and where to exit. So you wait the market to come and tap into one of your zone. Are you getting the point? When the market reaches in those zones, you diving into what? To H4. So as well, you can see here that the market came and tapped into what? To our zone. So when the market tapped to our zone, we are on our entry time frame. The only thing what you have to do here to refine. Why we refine? We refine to get a better, to get a low of the what? Risk. We get low risk and then we get the high what? High rewards. Are you getting the point? Let us refine this area to H1. Let us refine this area to H1. Let us go to H1 and we see what was happening here. You can see when the market tapped to our zone, exactly when the market tapped to our zone here, you can see exactly around this place, guys, when the market tapped to our zone, exactly here. What do you see happened? You can see that the market given this pattern. That is only what you want to see. Immediately when you see that pattern, then you execute entry time frame so that you can get your entry confirmations, and then you take the trade. For instance, if you are not using the candlesticks pattern confirmations, we can draw here a H1 counter trend, and you wait to see what will happen, and you wait the market to break that trend. Also, you get the confirmations, then you write the market down. Are you getting the point? Where is the target one? The target one we see in a daily, it was this one. Are you getting the point? This was what? This was our target one. You can see that the market come very well and tapped that, hit that TP. Then you can wait the second round and the market also come back. The market have come back again. You can see also giving us another entry, and then we bring it down again. So as well, we are still having some entries. We are using the same strategy to trade. So guys, if we go back to H4, let me take you to H4 and you see what I'm telling you. You can see that the market, it have given me here a bearish engulfing, and then I executed. Before I executed, I was supposed to execute here. Are you getting, guys? As my entry time frame of H4. When the market come and tap to my zone here, guys, first what I did, H4 didn't give me any candlestick pattern. I had to leave, and then market come back here and then go to rejection. My entry was supposed to be here, but I didn't. I was not on the market, I was not on the chart, so I had to wait another second confirmation, and I got here a bearish engulfing. So then executed. Now the market, I have traded it down to this to target this daily this daily low. I get it to target this daily low. You can see it very well. So guys, take control of your trading destiny. Subscribe now for the exclusive Volatility 75 insights and start maximizing your profit today. See you for the next video. Peace.